Good day, investors. My name is Lawrence, and thank you so much for watching this channel. A channel talks about investing in stock market and also talks about how you can be financially independent. If you're new to this channel, please consider subscribing so that you don't have to miss on my other new uploads. Talking about subscribing, actually recently I was trying to check my metrics and I was surprised to find out more than 80% of the viewers like you are not yet subscribed. I humbly wish to request you, if you're not yet subscribed, to please subscribe, because the more subscribers we have, the more our channel will be recommended to new viewers, to people who want to learn about investing, and this one will be more helpful to us, to me, and also to the new viewers who are looking for content about investing. So before I start, I would like to ask you, how was your Christmas? I hope you enjoyed your Christmas. I hope you enjoyed the festive seasons. And if you did not have a good festive seasons, I would like to ask you to be strong and also keep hoping that things are going to be better. And definitely I want to wish you a very pleasant, financially stable, financially successful year 2025. So let's go dive into the main topic of today. Today I'm going to be discussing the best performing stocks on NSE. So basically NSE is Nairobi Securities Exchange, which is the largest exchange in East Africa, and this year it was one of the best performing, if not the best performing exchange in Africa, as I am going to show you. Hope you have benefited from this rally. So let's go directly, but before we go into discussions, I would want to make a disclaimer. I'm not an investment or financial advisor, so I'm basically sharing my opinion, which should not be taken as an investment advice or financial advice. If you're going to do any investment, please make your thorough research or consult a licensed coach or financial advisor, because investment does carry a lot of risks, and I can assure you, you can lose a lot of money if you don't make research. So let's go direct to number 5. Number 5 is Liberty Holdings Kenya. So I'll be making a brief introduction about the company, what it does, and why maybe it did perform well. So number 5 is Liberty Holdings Kenya. This is an insurance company. Actually, it's a subsidiary of Liberty Holdings South Africa, which mainly deals with insurance. Actually, most of the insurance company, they do also investment advice. So mainly they invest in money market fund, they invest in treasury bills, they invest in treasury bonds. Mainly they put the money in most of the safe investment options, because they don't want to lose people's money in case anyone has issue, or any company that insured their products or their people got issues, they don't have enough money to pay. So personally, if you watched my previous video that I was discussing about the worst performing videos, I said I do not invest in insurance companies because, first of all, I don't understand insurance company, and also one event in insurance can affect the whole business. So that's why I don't invest in insurance companies, but that one does not mean that they are not people who understand it. So if you understand insurance businesses, definitely you have to give a shot. So does this mean that it's going to maybe replicate the same performance next year. There is a statement that says the past performance does not guarantee future performance, or previous best or worst performance cannot guarantee the future best or worst performance. So how did I reach on this calculation? So how you calculate the increase, the percentage increase or percentage decrease in stock price, basically you have to get the opening price and also the closing price. So you get the closing price, you subtract it from the opening price to get the share difference. So after getting the share difference, you get the share difference, you divide by the opening price, then you multiply by 100. That's how you get the performance. So I'm going to be practically doing it on my calculator. So also this Liberty Holdings, it also paid a dividend. So a dividend, definitely you have to add it on the share difference to make the total gain, because basically dividend is one sure money that you get practically into your pocket. So definitely it's a gain. So if we go to our calculator, you get which was the closing price. This is 6.50. You subtract from 3.86, so you get our 2.64. So if you add 0.373, you get our total gain, which is 3.013. Then you can divide by the opening price, which was 3.86. Then you can multiply by 100. So 78.05. So I rounded it to 0.1, which is 78.1%. This is extremely very good performance. If you invested your 10,000 Kenyan shillings, you'd have gotten almost double of this amount. So this is extremely very good performance. No company, few companies do get this kind of performance. It's a very great performance. So as I said, the previous performance does not guarantee future performance, and if you're going to invest in any company, I request you humbly to do your thorough research so that you don't have to mess. As I said, investment do carry a lot of risks. So this is number 5. Let's go to our top 4. Top 4 is KCB Group Kenya. I have to disclose I own a lot of KCB Group Kenya. If you have been following my channel, I love banking stocks because I do understand them. I can tomorrow, even without seeing anything, I can discuss banking because I do understand banks so much. So KCB Group is Kenya Commercial Bank. Basically, it's a banking group and it has a lot of subsidiaries. It has Kenya, Tanzania, Uganda, then also we have Rwanda. So it has many subsidiaries. So, and what was the reason for its best performance? If you remember last year, it bought, it bought a bank, another bank, but it started struggling because it's NBK, it's called National Bank of Kenya. So it bought it, and I don't know what happened. Maybe they paid a lot. There are some things, risks they didn't foresee, and they started struggling. And at the end of the day, it affected its performance, and also through the COVID time. All those two things combined, they let the bank perform very poorly. So, and what angered us investors was last year KCB did not pay any dividend. So most of the people were annoyed. They sold their shares and the banking stock went up to 15. So from 15, 17, I basically also bought some of it. So that's why, so from 17, then when they announced this, that they were going to pay dividend, also they started performing well, their results came positive, then the people started buying the stock again. So that's what made it to perform better this year. So basically the same calculation. So you get which this is the current price. The price by the time I was recording, which was 39.65, you subtract 21.95, so you get your 17.70. This year it paid 1.5 dividend. Definitely you have to add 1.5 dividend, which will give you 19.2. Then you divide by the opening price, which is 21.95, then multiply by 100, so which was 87.47. So I rounded it up to 87.5. This is another extremely very good performance. So what do I have to say about KCB Group? Should you buy it in future? Should you be buying it in? Should you be buying it now? As I said, this is my opinion. You have your own opinion. So please make a thorough research. But personally, at 39 is still a very good price. According to what I calculated, is a very good price. If you want to do for the future investment, I believe 39.65 is a better price, but not a very discounted price. So personally, as I said already, I have enough shares. I'm not buying anymore, but in the future, when maybe it reaches up to 30, I will even buy more. But at this time, I'm stopping. But if you're hoping to buy, I still think this price is good, though not a discounted price. So this was my fourth best performing company. So let's go to number 3, top performing company. This actually surprised me. I&M Group. This is also a banking group. This actually it's Mauritius-based company, so it also performed extremely very well. Basically, as I said, most of the banks COVID affected them, so basically they are still bouncing back. And if you can see its dividend paid, which is 2.5, and also it did pay some interim dividend, though not in this year, but definitely its dividend policy made it to improve. And as I said, it was undervalued because during the COVID time, it also did decline. So now the bank is actually, you can say there is a bank favor. Most of the banks are getting better and also improving their pay, improving their revenues. So many people are taking this advantage to do the, so nothing much to talk about it, but as I said, it also has a different branch. It has also in Uganda, it has also different branches, so which makes it better because it diversifies different markets, giving it this advantage. I'm not going into the calculation, so you just have to get this closing price. You subtract this, you get this amount. Then dividend, you get dividend plus this difference. Then you get which will be the total, which will be 16.85. 16.85. You divide by the opening price, which is 17.45. Then 96, definitely multiply by 100. So you get 96.56, which I rounded off to 96.6. So if you had your 10,000 Kenyan shillings, means you doubled it. This is also another extreme performance. Very few companies do this, double their earnings. So that is how profitable, I mean, if you had invested in stock market and mainly bought this company, you would have done. So should you be buying the company? Should you wait? Personally, Peter Lynch, one of the greatest investors of all time that I follow, said the company going up or going down does not mean that it will not go up or it will not go down. It depends on what you want. Check the fundamentals. If the fundamentals favor you, if the fundamentals are still good, there's nothing that will stop the company from still going up, as long as the profitability, it's paying dividends, also the revenues are growing. There is nothing that is going to stop it from going up. So if you decide and you find that it favors you, the fundamentals, the revenues, the dividends, all of them favor you, please, why not? Go ahead and buy it. But as I said, please always do your research. Investment carries a lot of risks. You can lose your money if you don't take caution. So let's go to second best performing company. That is Kenya, and this is one of the surprising companies. I used to own Kenya Power, actually for like maybe 3 to 4 years, because when it went down, I did research, I made my own research, though it had a lot of company, but there are other good things because it is a monopoly, it is the main supplier of power. So though it was in debts, but was trying to recover. Also, to the revenues were up and down, but they were trying to do some positive things. So I bought it, but when it reached around maybe 2 or something, I sold it because personally I'm a dividend investor. When Kenya Power was not paying dividends, I had to invest in a better company. So by the time it reached this time, I have to declare I was not owner of Kenya Power. It did surprise me so much. So why did Kenya Power double its the investors' revenue? So there are 2 reasons. One, it did, if you follow the stocks, Kenya Power released a very strong performance. Their earnings per share was a very strong performance, and also it declared a dividend for the first time. I don't know how many years, 7 years. So that's how good Kenya Power. So also the investors had react to its good performance and also its dividend. So that's why it did perform well. Oh, definitely. Like the way we are doing, you get the 4 minus 1.4, then it did pay the dividend. So if you get 2.61 plus 0.7, you get this amount. So you can get 3.31. You divide by the opening, which is 1.40. You multiply by 100, which was actually this. There's an error. So it's 3.31. You divide by 1.40 times 100. So basically you get the same as 236.40%. This is a rarity. A rarity. Let me tell you, in East Africa, I haven't seen companies that have performed in 1 year like Kenya Power in a single year. So this is extremely one of performance that you and me should be proud of if you invest in the stock market. Yes, I was not owner of but the people who own the stock market, and especially this company, really they are smiling to the bank. So that's the best thing about investing in stock market. If you do your own research, basically Kenya Power is, as I said, it has a lot of debts, But one aspect, there are two aspects why I did not invest in it. I had to sell my shares. One, 50% of the shares are owned by the government, and if you watched my video or you haven't watched, you need to go there and see which companies you need to avoid. One of them is where the government, especially in East Africa, owns more than 50%, because most of the governments in East Africa are very corrupt. So when they own the company, they hire corrupt people, they don't do their due diligence. So most of the companies, they don't do the best. Second, it was not profitable. Like, it was 1 year it was making profits, another year it was making loss. Then the debts. So three things. The reason why I had to sell my shares. But maybe if it comes down and keeps performing well, I will look into it and buy it. But for now, I don't own it. So does it mean the company will still get better? As I said, there are three things. And the person that I follow, Peter Lynch, says if the company is going up, it doesn't mean it will not go up, especially if the revenue keep increasing, if it keeps paying dividends, if the management keeps getting prudent, getting better, it will keep going up. So I don't have any view about it, whether it will go up or down, but what I can say is if it keeps paying dividend, if it keeps doing well, the revenues are growing, and also keeps paying debts, definitely it will keep going up, because it's still discounted according to my calculations. Though, as I said, there are other things, the reason why I wouldn't not invested in it. So number one and the top company is East Africa Portland Cement. Another surprise. This one surprised me completely. It caught me off guard. I didn't know that actually this company could be the top dividend company. I mean, the top performer. So East African Portland Cement, as I said, it purely deals with cement, manufactures cement. So that's what it does. Its job, it's in a construction industry. And why did it do better than all the companies? Of course, there were speculation of being bought off, and before it was kind of undervalued. So people, of course, expected when it is taken over, the new investor would pay more money than what is expected. So purely that is what did it. Actually, most of the takeover anywhere in the world, normally I can say more than 80%, they end up well, because the new owners normally pay more than what was on the thing. But personally, if you're not investing in that company, normally I don't advise buying those shares, because if you're an investor, you should always avoid uncertainty, because uncertainty is a very, very bad, though it can be extremely very good. Personally, I don't like uncertainty in investment, because I like the future. Definitely, you don't know the future, but most of the time, the uncertainty that you're very sure of, always avoid. So basically, it did not do much, because you can see it even did not pay the dividend. So purely it did speculate, the owners did speculate, the investors speculate that they are going to get a new investor who will purchase the company and pay a lot more money. So personally, of course, I'm not invested in it, and I don't plan to invest it in the future. As I said, I don't deal in speculation, but as long as it makes money for you, you can go for it. But speculation for me is not for me. So basically, those were the top 5. So what lesson can I drive from this? Some of the companies, I'm not surprised, but most of them, they surprise me, like banking, as the banking is the future, definitely. So it's the futurist company. So having 2 banks in the performance, I'm happy, because I'm not surprised. Banks rule the world. They're still ruling the world. So, and in the future still, I'll keep buying banks. Actually, in my stock portfolio, I own more banks than any other company because I understand banks more and I know they are going to be there in the near future. And in our East African region, the region is still growing. They need more money, and the banks definitely they are the main providers of capital. Once again, this is my personal opinion, and if you're going to make any investment decision, please make your own research, make thorough research, because most of the people have lost money in form of investing, because investing is very, very risky if you don't do research. If you have managed to watch until here, I'm really, really thankful. And if you're not subscribed, please, can you subscribe so that the videos can be recommended to other new subscribers who want to learn about investment. Thank you so much for watching. Have a good day. Goodbye and happy New Year 2025.